Hey y'all, it's Brian from Ledger Status. I want to briefly share why I think Bitcoin has a road to 11.5K as a next primary target. We are definitely signaling bullishly in Bitcoin. I just want to use the simple strategy of the price relative to the 200-day moving average. It tends to respect that average, and then from a short time frame, this 20-day moving average. That 20-day moving average also serves as the Bollinger Band midline. Let me go over here and I'll turn on Bollinger Bands so that you can see them, and that way the 20-day moving average sticks right there in the middle. That's just a line that people watch for a variety of reasons, whether the 20-day itself or as part of a Bollinger Band strategy and its response off of that midline. So I like to look at it in relation to the 200-day moving average as one of those things that gives me some signals for seeking trend flip confirmation. In addition to just, the classics of seeing higher lows, here's our low, higher low, somewhat of a higher low, and now we're seeking another higher low here off of a daily close around 91.50. We didn't test all the way down to these moving averages. 88.50 would have been the 200-day retest. Also this horizontal level right here, 89.30. Those are your obvious, take a stand for a long. People preempted buying there. Now we could test down on a down day. It's still possible, but we've also seen enough of a dip straight back into this wick here to where maybe we don't even do that. So I'm seeking upside here. It's a matter of grinding through these levels that we broke down from back here. There's going to be people that, they want to escape because they got upside down buying, thinking we were going to go back to 20K from here, things like that. However, I think that things look pretty good. Now I'm throwing a lot of drawings on here. We grinded through these three levels that I had identified. Basically, any way you wanted to draw the channel or whatever you wanted to call it from back here, we broke out of that. Now we broke above the 200. So now we're fully back into these areas over here to say what are the next levels. One would be this breakdown level around 10.2. It's possible that we get there and find more immediate resistance. This red line, however, is a weekly close that I want to highlight that I think is relevant. So you can see here, once we get past this weekly close, which we're tapping into, so that's basically what we're fighting right now, 95.60, takes us back. Really, this is the big one. This is our highest weekly close that we've had since the run up to 14K at 11.5. And I think really that's our inevitable target for where we're hoping to reach. And that's why I think that's our next place to consolidate or look for. And depending on how risk off the environment is, we could blast right through that and make a higher high and then really be off to the races, or, see if we can consolidate significantly higher, maybe between 11.5 and 14K, something like that. Either way, I feel really good about that level. There's a lot of confluence, kind of no matter which time frame you're looking at. I'm going to turn my drawings off again and show you another trend following strategy, which is the Ichimoku cloud. The pivotal thing about moving up would be breaking through this cloud on the 3-day. On the daily, we're already above it, so we're more talking about, hey, where would we find buying? And this Tinkin coincides pretty closely with our 200-day moving average in terms of a place to buy. A deep retest, one we'd want to wick off of but really not close, would be like 8,500. So if we had a intraday really strong move, we'd want to see 8,500 to 8,900 get bought back up really quickly to confirm our dips are for buying bias. If you look at the cloud on the weekly level, again, 8,500 is the weekly Kijun. So this is kind of 85 to 86 is our last gasp of needs to be bought. 9K or so would be the weekly low, the prior weekly low. And then you get back up into our target ranges. That gets us into this above 10.5 and then eventually up to 11.5. One of the things we see sometimes on these weekly clouds, like back here, is you can blast through it and then retest it. So that's why I think it's possible we get somewhere up here, 11.5 above the cloud, but maybe close the week at like 10.7, something like that. So that's how I'm looking at Bitcoin. That's from a trend following strategy. Why, in my opinion, seeking buying at 8, 9, 9K, something like that, and looking at targets back here on this weekly close around 11.5 for that trade, and then kind of your stop out, look for new setups would be if we get a daily close below 8,500. If we draw a risk profile on that, basically meaning, okay, here's my long short, then if you set your stop, let's say at 8,400 and your target at 11.5, you're looking at about a 23-24% gain, depending on where you get your entry, and about a 10% downside. So it's a risk return of about 2.4 R, which isn't bad. A lot of people might think, hey, that's really a loose stop. And of course it is. Like you could set stops, just below the prior lows, below the 20-day, below the 200-day. That's going to increase your chances of getting stopped out, but it's going to improve your risk-reward ratio, if you will. However, in terms of the way I'd be looking at this, particularly for holding common shares, if you're not on margin or something like that, would be a much looser stop to say, I don't want to get out of this market. And I want to seek what my reward profile would look like. Something more like this would be up my alley personally. That's all I got. Hope that helps, and we'll talk to you soon.